Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
In the meantime, we've got dealers just really, I think this kind of sums it up though pretty well. Dealers are starting the new year broadly short gamma, implying conditions for higher volatility, which we're getting a lot of, right? But we're not getting above that 1929 in VIX, which is very telling to me. So in the meantime, let's kind of keep that in mind that we're not falling apart. And we got New York Fed backstopping the Treasury market through the 3rd. We've got the Speaker of the House drama, election count verification next week or after the speaker is actually elected, so we can have a smooth transition of power into the 20th. Otherwise, markets will see some more volatility. But in the meantime, under this current kind of regime, where I just showed you that chart of CHOP, the market makers generally contribute to higher volatility as they must delta hedge their positions in the same direction as the underlying momentum. So in other words, they have to sell futures into weakness and they have to buy futures into strength. So that's why we're having some kind of bigger price swings, but we're not really moving. So remember, we're kind of back 2 months since the Trump bump. We have not gone anywhere fast. That's my expression anyway. We are at risk of rolling over with a big old head and shoulders, which I've shown you, but let's kind of keep that in perspective. Sometimes head and shoulders can also can be continuation patterns. SPY, this was a November 20th low, and here we are in January, and we're really not doing anything. Same thing. Here's the election bump. What we have is a incredibly messy chart. We got 3% down day on FOMC, and then just a really, really messy chart. So prediction of CHOP for this month of December, now January. But one thing that is not weak, one thing I do not think is weak, besides the obvious here, oil, is yields. I don't think yields are going to fall over. Nope, I don't. We had our head and shoulder potential here. If it was gonna break, it had to break. Right down here. Can we still? I think yields are a little bit firmer than folks would like. Yesterday we saw a big move, big move in the dollar, right up into some key levels, which I've shown you before. Right, this is my dollar level. Really nice job. We just keep coming back down here and holding that 100. We got above the trend line. This is the weekly, by the way, and this is the day. So you can kind of see it close up and personal. And this was another example where we had head and shoulders, but I said, hey, so it can be continuation or rejection. And we got a continuation. This was our rejection, right? Central bank intervention, $1.5 trillion in global central bank intervention, according to Matt King of Citibank. Then we broke the 110, we'll call it 111, but 110.79. We broke, and the rest was history, right? This was a major support for both bonds and equities. Very, very, very key. And then, of course, we had this November 1st Fed pause and Yellen Yahtzee. And I literally did podcast on that November 9th and said dollar's going to fall. That's going to be supportive for equities. And the 16th, I said it might even be 1999 or 1995 style equity run. Anyway, the point is they know how to come in and intervene to get the dollar down and yields follow and vice versa. So right now we're at a pretty perky level, but it's extended. We should have some digestion. And that would also, by the way, it's bearish, obviously, if it gets too fast, too furiously moving, no question, it's a headwind to equities, but it could also get tapped down in the next few days, and that could be, or weeks, that could be after the inauguration anyway, could be a little supportive for equities. So we're in watch mode right now as it relates to the DC activities, but I think that might be some of this move in the dollar's strength. Right now, as I mentioned, yields aren't participating. Fed has their means of supporting the credit and bond markets. And then we've got lots of continued terrorist war vibes, but you can see today gold is softening a little bit. The oil and nat gas trades, however, are not really. So those are mostly bid on weather and Russia closing its pipeline to the EU. So they're keeping that commodity bid despite the dollar advance. Gold right now getting a little digestion, but you're always going to see that kind of tremor when we get definitely political instability. Anyway, long story short, it was also due a rotation, right? That whole energy and metals space were extremely oversold and the growth names were extremely overbought, like Tesla etc. So right now, I just want to kind of highlight the headwinds, but also the fact we're not falling apart. We do have New York Fed. We do have dealer mechanics. It makes us more susceptible to a downdraft. So if we get some volatility headlines out of DC today, you were forewarned. We're not out of the mess yet. So I did that write-up, a few weeks ago, melt up into instability. We got it. And then just latest one, which is the 27th. It's a week ago, but the point is undercurrent of weakness persists. And here we are this week. Pretty much it's what we've had. Apple was great short. It came down to the 10-week yesterday. Tesla's really come down also to the 10-week. Oh, and even Square bounced yesterday from that 55-day. All right, so you can see Apple, beautiful. This is gorgeous. Evening star reversal with a rejection. Gorgeous, gorgeous, gorgeous. Remember that Friday? I'm like, I think it's going to go green to red. And it did. And then we had this gorgeous day before, which was basically, I think this is done. We're going to go back down. And we opened weak, so we could really, really fall into that 10-week. Are you still short Apple? This is support. Monthly support is 237. 237 is monthly support for Apple. That would be a great place for it to come back down and get supported, honestly. But usually at the 10-week, it has a little digestion period. So Apple, it's on the 10-week right now. It's 242 area. It has 238 on the daily, 237 on the weekly and monthly. So that's definitely the area where you want to keep some short and then expect it to digest and base. Remember, this is a huge level of support from July of 2024, and then again in October, and then once it got above in November. So revisiting this wouldn't be a surprise. Breaking it would be, but it hasn't broken trend until it gets and stays below this. I think this would be a good still area for keeping your short on Apple, keeping some of your short on Apple. Same thing with Tesla. Now, remember, I know there's data coming out of China and the rest, and I know they also had deliveries disappointment, but the point is it was still just way extended, and that's a reversion to the mean trade when it comes down to the 10-week. It's not there quite yet, maybe pre-market it'll hit it, but you get the point. Those are reversion to the mean trades, for lack of a better word. Now, if you're looking to see where I'm, just as a kind of reminder, so that's big picture. We definitely have had a disappointing Santa rally for some, and that's just kind of part and parcel for the course. We also have the risk of Mag 7 coming back in a little bit, especially with elevated growth to value, which I have also posted. We get extended, we get a little above our skis, and it has to come back down and play catch up. This is more of my kind of overarching thoughts of, hey, we still have a big elephant in the room that really hasn't been addressed, which is the 10 and 2-year yield curve continues to strengthen, and it's moving higher. So keep that on your radar. All the other yield curves from 3 months to 30-year have also gone positive. Below zero is disinverting, and above is positive. So the threat we still have of higher yields on the 10-year is still in the house. We're not going anywhere fast, right? So we came right back down to the Friday, December 20th, when I wrote green shoots, right? We had this gorgeous December low for SPY. We had a December low. NASDAQ has just revisited, and I wrote about that as well. So here's the live trading room summary. Just to remind, I also post some charts in here, especially as it relates to kind of more actionable stuff. Here's that oil trade where Robert said, don't be short. And sure enough, this thing continues higher this morning. This is from yesterday, but you get the idea. So we're definitely getting some bid in the oil complex. This is what it looked like yesterday. Also, even when a few hours into the morning, yes, not even by noon, where we had this extremely strong bid in gold and dollar and oil. And I wanted to help explain it, where the market is still fragile. There's weakness undercurrent of weakness that persists, and then we have them come right back down. And then, of course, yields still don't look very weak to me, if truth be told.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.